Please ask your question one more time. You talked about the sideways or neutral candlestick. Yes. And also, in our 38th level, in our central pivots, you told us that in the 38th level we're going to have a sideways trend. Mm, I'm going to talk about the sideways trend today. Let me talk about that right now. You see, sideways candlesticks or neutral candlesticks are our doji candlesticks that are very small. Doji candlesticks are for stopping the market. If a doji has a shadow from the two sides or just from the one side and the body is just like a little line in the middle, that is where your market is resting, and it kind of forms a sideways trend. And the reason why these candlesticks are completed is, you see, on 2 p.m. in Iran's time, it starts, and until the 3:30 p.m. And at night, it's from 12:30 a.m. to 3 a.m. In this period of time, this happens, and that is the time that you shouldn't trade. If you trade, you have to expect to gain your profits after this period. I'm going to show you an example. For example, these. Let me zoom in so you can see better. These. These are around noon or midnight. And they're usually formed in powerful pivots, even either in your 38 or 61 overall Fibonacci levels. But about when they're formed, it's at these two periods of time that I talked about. These two periods are times where you have no news or the news are not important. Because based on the time frame, if you want to ask the time frame, it doesn't matter. The time frame is not important. You see, it starts from 1 p.m. and ends at 3:30 p.m. And you can check your 4 hour time frame. You don't have any fluctuations in that times, or you have very little fluctuations. And about the candlesticks, I told you that it looks like this. These candlesticks here, or these candlesticks. For example, look at this one. This is a doji candlestick. And I told you that you can't really depend on these candlesticks for a reversal. So you have to plan in a way that you don't start trading in these periods of times. For example, if you're online on the market on 9 a.m., you have to close your tradings at 12 p.m. And after that, when it's 4 or 5 p.m., you can start your tradings again. So let's talk about this sideways trend, and it's one of the headlines that I wanted to talk about. When do we have a sideways trend? If you want to be very practical and professional, two or if you have 2 or 3 weeks of a good market, after that you're going to have a sideways trend for a week. And that is exactly what happened last week. I think on Thursday the sideways trend ended. So whenever you see that the market is having so many fluctuations, it means that you have a very good market and there are very good opportunities. And fluctuations are a lot. Know that, for example, this is the first week that you have a good week, and next week is also going to be a good market, but the third week, based on the candlestick, you have to determine if you have a sideways trend or not. But you can analyze your weekly time frame. In your weekly time frame, based on the candlesticks that are formed, you can exactly find out if you're going to have a sideways trend this week or not. So if your weekly candlestick is a good candlestick, is it's a swing high or a reversal candlestick, or if it's a big continuation candlestick, it means a good market. But if your candlestick looks like this, exactly from 2 weeks ago, this is showing me that I'm going to have a sideways trend. I'm going to highlight it for you like that. Hi. Okay, so this is our market for a week. And you see that you see a sideways trend here. I Excuse me, your microphone is unmuted. Please mute your microphone. Alright. Please, everyone, mute your microphones. Okay, so the conclusion is that in our weekly time frame, if we have a swing high or a reversal candlestick, or at least a good continuation candlestick like this. These are our continuation candlesticks. It means that you're going to have a good market that week. But if you have a candlestick like that, if it's small, like this one, or another example is this one, these two candlesticks here, you see that it's obvious it was going to go up because the neck here has been opened. Or let me find another small candlestick like this one that was completed inside its previous candlestick, exactly like the rules of the candlesticks. That means that you're not going to have a good market that week. Instead of looking at candlesticks in shorter time frames, you're looking at the candlesticks in your weekly time frame. It's the same. So you see, based on these candlesticks, I can find out if I'm going to have a sideways trend or not. For example, this is the first day of this week's market. If I move into a weekly time frame, this candlestick here is our AUD/USD chart. So this is a candlestick that is completed inside the pivot. And the next candlestick is going to get completed next to it. And I told you that this is a engulfing candlestick. So this one has to reach this point. But when is it going to reach this point? It starts from Thursday night or Thursday morning. So in the 2 days that you don't have any trends because you have an engulfing candlestick. So in here, when you're at this point, you shouldn't ruin your strategy. You know that this is going to be an engulfing candlestick. You can put your take profit above that if you're taking an order, and don't touch it. Don't change it. And I know it's going to be hard. But in here, for example, we have a good candlestick. So it means that we're going to have a good market this week. And this is a swing high candlestick, which is above this one. So the price is trying to go up. So I know that in my NZD USD chart, I'm going to have a good market, and the price is definitely going to reach this point. And after this point, I have pivot, so I have to be more careful. Or for example, in our JPY chart, we have a reversal candlestick there, and it was open from the bottom. So I know that this week the market is going to be good because this is a reversal. This is the weekly reversal candlestick, so it has to be performed, and it has been opened as well. So it has to decline up until here. So let me see if I can find an example of a bad market. For example, this one in your USD CHF. Your candlestick was completed, but it's not neither a continuation nor swing high nor reversal candlestick. It's neither of those things, and it's an engulfing candlestick because it was completed inside a pivot. So with much delay, it's going to decline. So you shouldn't trade based on this. You know about candlesticks now, and I told you when you should trade based on the candlestick. So if your weekly candlestick is this one or it's this one, these are the engulfing candlesticks because they are completed inside your pivots. Don't trade based on these. Don't say that I have to trade on this chart. Because when your market is not good, you shouldn't trade on that chart. Because you're going to lose. It's going to be very hard. Or for example, in your USD in this chart, you don't have a good market. Your weekly candlestick was completed inside the pivot. You have had an open close pivot, excuse me, here. And this candlestick is neither a swing high or a reverse continuation or reversal, so you shouldn't trade based on this candlestick. And even in your technically analysis, you shouldn't trade either. So on what candlesticks can we trade? On the candlesticks that I told you. For example, in the gold chart here, the gold chart had a very good market this week. I gained a lot of profits this week. The Fibonacci's were so accurate, and the trend was complying with all of the rules. Yes, exactly, because the candlestick here is a very good candlestick. In your weekly time frame, you're getting a very good signal. You see that you have a bullish candlestick here, and it means that you're going to have an upward correction. So this week, gold is going to go up. It's the same in your shorter time frames. And it shows us when we have a sideways trend or not. So let me draw the Fibonacci for you. You have two Fibonacci's because you have two swing highs. One of them is this and one of them is this one. So exactly on your 50 level, you've had a reversal or a retracement. But when your price is going down and it breaks the Fibonacci, because in the future it's going to be downward, it's only going to have a correction, a small correction. But when it reaches this one, it's going to go up a bit and you're going to have a sideways trend for a week. And it was the same in the past. when when it was reaching the 38 level, it had been stuck there for a week. So when you're trading in your weekly time frames and you're analyzing your weekly time frame, you can see that you're at your 38 or 61 level. And if you don't see the candlesticks that I talked about, know that that week you're not going to have a good market. But I'm going to talk about every single candlestick and every single situation on the market. You see, in your pound chart, the price has been opened from the top. Let me highlight it for you. So you see a you swing low pivot, so you can understand that you can start buying here. So this is my Fibonacci and this is my 50 level. It has retraced to the 38 level. It means that it was open from the top. And you know that you're going to have a good market that week. So if you had understood this sooner, you could have started trading much sooner than that. So as you can see, you have a very good market this week. And this night it's probably going to reach this point. If the candlestick is completed like this, it breaks this pivot here, it's going to reach there. So it's a good market. My I can't see the euro dollar chart very well here. Let's move on to the daily time frame. Imagine that this daily time frame is our weekly time frame. We just want to determine the candlesticks. So in here, imagine this is the weekly time frame, okay? So 2 weeks ago, I've had a very good reversal candlestick. So 2 weeks ago, I had a very good reversal candlestick, and it was telling me that we're going to have a correction, and a V shape is going to be formed. So it's like our 38 or 61 level that we talked about. This is our overall Fibonacci. So the next one, I told you that when the price is shocked, when it reaches the 38 or 61 level, it is shocked, and the next candlestick is a sideways candlestick. So the rest of the market's rest is over, and you're going to have an upward movement. The weekly candlestick was completed inside the pivot. Excuse me, it was completed above the pivot. You've had an open close pivot here, and the price has gone further than that. So you know that you were going to have a continuation candlestick again, and that week the price was having a good trend, and it's still going to continue its movement up until here, and it's going to be stuck on these pivots. But unfortunately, I don't have the weekly time frame of my euro dollar, but this is a continuation candlestick. Excuse me, an engulfing candlestick, and the retracement is until the previous pivot, and it's going to engulf this candlestick completely. Mr. Turkey has asked a question. When are we going to have a confirmation from the candlestick? You have to wait for the market to be over. And at the last hours, you're probably going to have a signal. In your AUD chart, you don't have a very good trend this week. And you have an engulfing candlestick here. In your NZD chart, you have a good market this week. and it's giving me an ascending signal, so it's probably going to reach this point. In your JPY, your market is neither good or nor bad. You have a swing high candlestick here. So this is the swing high candlestick, and you have a descending signal. And the pivots are in this area, an open close one. So the price is going to reach this point. In our USD CHF chart, we have an engulfing candlestick. So the price is going to be stuck there. It's probably going to have fluctuations with delay. So if you're doing a sell order, know that the price is going to be stuck there for 2 days. So don't be greedy. In your USD CAD, you have an ascending signal, but the candlestick was not completed in a good spot. You see, you've had an open close pivot here and another one there, a swing low pivot here too. So it's not in a good spot. You're having an ascending signal from the candlestick, but the pivots are giving us a descending signal. So it's probably going to have a severe fluctuation in here. It's not going to go up or down in just one movement. It's going to get stuck here in your supports there. Exactly here. And we have highlighted the pivots too. Let's adjust it. For example, here. So the price is going to get stuck there. And when it reaches that, you're going to have severe fluctuations. You see, the candlestick is giving us a descending candlestick, and after that, it's going to go up. Because you have a sideways trend, you're looking at it on your 4-hour time frame, and you think that it is having very good fluctuations, but you have to pay attention that it's stuck in your weekly time frame. So exactly when you start to sell, it may retrace and go up. And also, all of the strategies are going to work out here. Your Fibonacci pivots, all of the strategies, but you have to wait here to see if you have a good confirmation, and after that you can start trading. If you get the confirmation from all of the strategies, you shouldn't be afraid anymore and stressed out, because you know that you have all of the confirmations. Or for example, on your oil chart, the most technical symbols are your main currency pairs. You see, some of your main currency pairs are good, some of them are not and are delayed. But all of your main currency pairs give you good technical analysis. For example, in your oil chart, you have a very good descending signal. And the V shape here has been completed, so you have to put your sell stop here. So if it declines again, you see it has gone down here and then it has gone up. So the second time it declines, you're going to get a very good confirmation from that. So you should put a sell stop here. But when your sell stop is open, you're going to have a lot of profit because it's very technical. This is your 11 level. It has to retrace there, and that is what's happening here. So you can gain a lot of profits here, and it's exactly where this candlestick is. It's going to shock the price. It's going to go up a little bit where your pivot is, and after that it will decline. It means that if this is performed, if it declines and all, your main profit will be about 500 pips in your long-term trading. Your daily tradings, you're going to have a zigzag pattern. You have this trend line here, and the retracement of this will be the 23 level right here. I'm going to draw a central trend line, which will be this. So it will either reach the 23 level or this line here. It's going to have a retracement there. But remember to always draw this trend line. It's very important. We have put a sell stop there. We haven't started selling here yet, because selling here is risky. So I will be mindful. If it goes further than this, it is going to reach our 78 and 89 level. Right there, 89 level. And this was the pivot between the 61 and 78 level. You have a lot of pivots. And the next one is your 78 level, which is here. You should it will retrace a little bit above that, but on the circumstance that you're mindful of this area, if I delete the Fibonacci, you see this clearly. And here you can see a triangle, and you have to be very careful about this triangle. If you start selling right now, that will be risky. If you want to do that, you have to do it with a reduced volume. It is giving us a very good signal based on the candlesticks, but you can see an example from 2 years ago that all of the signals and the candlesticks were giving us would be wrong. All of them would have faded out. And I used to lose a lot on the oil chart, I guess. For example, a candlestick had given me a very good daily signal, but it was faded out. So this is your Brent chart. You can analyze it for your CL, but you have to be careful. These are very good signals, but you shouldn't be deceived by them. You have to wait for the price to go further than that. You have to wait for it to decline for the second time, and after that it is a confirmation for you. But sideways trend is all about the weekly candlesticks. You can find out if you're going to have a sideways trend or not. You can do it with your daily candlesticks as well, but shorter time frames are not appropriate for this. Are there any questions? You see, for example, on the daily chart of my euro dollar chart, it was Friday or Thursday that it was giving us a buy signal, and it was a very good signal too. So that's how you know that, you see, when you have several white candlesticks and after that you have an empty one, it is giving you a warning that it is going to retrace. So you have this empty one here, and you see a reversal candlestick that was very clear and obvious. A lot of people, a lot of my clients have gained a lot of profits based on this, because it's very obvious that it's going to go up. Any questions about the sideways trend? Alright, so for example in here, this is going to form a V shape. This chart is good for scalp trading. In your 5-minute time frames, you see a signal here. It is giving you a swing high signal. It was the shadow is long, it was completed inside the pivot, so the V shape is going to be formed. So you know that it's going to go up and it's going to form a V shape. But between the main currency pairs, the most technical one, the pound is not very good. It's been sideways for a long time. Euro dollar is good. NZD is good. USD JPY is great. Um, CHF has been sideways for a while, but not Canadian dollar. So these four, JPY, Euro dollar, and NZD are very good. They give you very good signals. How do we know that they are good technically? Based on the shape of your candlesticks, based on the zigzag patterns. If you have a zigzag pattern that is going upward or it's going downward in one movement, you have a good market. But if your zigzags are going on a straight line, you know that this is not a very good market. And you have a sideways trend in that. So you shouldn't trade based on these markets. You should look for V shape and reverse V shapes. If you just trade based on them, you will gain a lot of profits. You have to complete the V shape and reverse V shapes in your mind. I told you that in the market you have reverse V shapes and V shapes all the way. So how can you find out where the beginning and end of your V shape or reverse V shapes are? Based on your candlesticks, on your longer time frames. The reason I trade on long time frames is that, well, I'm busy, but also I'm looking for the main targets. The strategies are not too much. You're just learning about the technical and the technical methods. But we're going to mix up all of the strategies and all of the techniques together. And after that, we can use them. Now you have learned about candlesticks, pivots, Fibonacci, how to find out the market elasticity, and after that you can take orders. Candlesticks are not a strategy, they're a technique. You have to mix them all up together and use them together. If you don't have any questions about this, I'm going to explain to you how I trade myself. Are there any questions? No, we don't have any questions. Okay. The way I trade myself is like this. Mr. Sahray had asked if that we had a bet together. Okay, I will. I'm online on the chart right now. And I want to trade. I don't want to just open trades and go. You see, my balance is $5,000. If I don't gain 500 profits by the end of the day, I'm going to give each of you $100. If you don't have any questions, I'm going to start trading. Please don't ask any questions in the middle of the trading. No, we don't have any questions, but please use all of the strategies that you use. I will. I don't hide anything. Mr. Turkey, what are you talking about? So I'm going to close this. The first thing that I do is looking at the charts. That is exactly what I do when I'm online on the market. So I will review all the things that I know in my mind. So firstly, I look at the charts. I will zoom in to see the pivots, to find out what pivots I have on the market. Let me open another chart because the euro dollar chart won't open for me. I think you can see it because I am looking at my Anzo chart. I want to move backwards on the market and see the past of the market. I'm going to move on to several time frames and check all of them to see the candlesticks. I have opened an order, and please be careful. Don't expect, I'm talking about you. When you have opened an order, don't expect to gain profits right away. 5 or 10% of profits exactly at that moment. I'm just checking the candlesticks. I'm like moving between the time frames. I'm not doing anything in particular. I'm just looking at the candlesticks. And I don't want to work on the charts that are not good. The best chart is the euro chart. Please look at the Dow Jones chart too. Okay, I will. Let me complete this first, and after that I will look at the Dow Jones. So this is my first trend line. And this is my second one. This is my central trend line and a partial trend line. I'm just drawing the trend lines. This is my central trend line. So I know that this is the maximum of my chart. I will delete them so they don't confuse me. And now I'm going to draw my Fibonacci. Firstly, I will draw it. My 61 level, which is my maximum, is here. And the price is on the 50 level right now. Let me see what my retracement pivot is. So when it has gone further than that, the retracement will be in this area. So if it wants to retrace, I want to consider a little bit above that. Why did I put it here? Because when the price goes further than a pivot, it has to retrace and touch the pivot that's been broken again. It's always like this. When the price goes further than the pivot, it retraces to that exact pivot again. Dow Jones is not a good chart to trade on right now. I'm going to concentrate on the euro dollar chart. Let's check the market watch to see how long I have left for my 4-hour candlestick to be completed. 30 minutes from now, my hourly candlestick will be completed, and I will get the signal from that. Let's see what happens in the next 4 hours. I'm going to put a stop loss here. I'm going to use this technique. So all of the signals are ascending. Therefore, I'm going to do scalp trading as well in the order that I opened. I know my market elasticity is upward for now. So I'm going to do scalp trading in my shorter time frames. I'm mindful of this pivot. It's true that it's going to open this, but I have to pay attention to this pivot too. I'm not going to risk and do a buy order here. I have an ascending elasticity. The number of the pips up until my target is around 30 pips. It is giving me a descending signal. And another descending signal here. I can buy here, or I can wait for it to decline and then buy. I haven't sold here. In your scalp trading, you should never take these risks because you're using heavy lot sizes. I have a central trend line here that I'm going to draw it. I think I had drawn it before, though. Yes, most of the times I draw the equivalent Fibonacci. So the price has touched the pivot. I wait for it to touch this area. I'll be patient. I wait for it to touch it. I'm not going to get stressed out and rush into buying. Based on the candlestick, I wait for a signal. I don't rush into anything. The reason why I'm moving in between the time frames is because I'm checking the candlesticks. And I'm using my techniques. I'm going to drag my buy stop a little bit lower, and I'm going to move behind it because I keep on changing my targets. Because if the pivot here is opened, it's going to go up, so I keep on updating my target. The candlestick here is good enough, so I'm going to do a buy order based on that. So I closed the order right there. So it is confirmed. And this is my pivot. If it declines again, I'm going to start buying. If it doesn't, I wait for it to reach that point. I'm not going to be greedy. And I keep on checking my other charts to see if there are any more opportunities. In my gold chart, I have a very good buy signal. I'm going to do the tradings based on this engulfing candlestick, on the swing high here. So it declined. And it has formed a swing high, but it is a bit suspicious. I'm only trading based on the candlesticks. I'm not doing the scalp trading right now. I'm just checking the candlesticks, and I'm doing the techniques, checking the pivots constantly. I will put my buy stop here. I want to do a safe trading, because if it reaches here, I'm forming the shape in my mind. If it reaches here, it will be the confirmation of this swing high. So if it comes down for the second time after that, it's going to go up. So I will put another buy stop here, because if it goes further than that, it will go even more higher. I have to comply with the rules. I constantly check the charts. The oil chart is giving me a very good signal. I will put my stop loss here. It is giving me a reversal candlestick. So I will put my stop loss below that. And I will put my take profit on the pivot. Euro dollar is moving sooner than I thought. I will put my stop loss below that. I put it here, because if it reaches here, it's going to go further than that. I have a pivot here, so I can exit the trade there. After the After the bearish candlestick, we have a bullish one. If it gives me a signal here, it's a confirmation. If it goes a little bit further than that, that will be a confirmation for me, because I have the warning here. In my pound chart, I have a downward elasticity. It's a little bit suspicious. If the buy signal was more powerful than the sell signal, if it was in this area, it would have shocked the price and gone up. So I have to be mindful of it. You see, it is going down in one movement, so it will be faded out. If it reaches here, I shouldn't buy, because it's going to go down even more. I shouldn't be greedy. Doing that will be a mistake, because your elasticity is downward. If it reaches your stop loss, that is okay. This is not your only trade. You're going to lose in some of your orders. Don't get stressed out. Keep on checking your charts constantly. Check your signals constantly. In my 5-minute time frames, I have a reversal candlestick, but above that we have a pivot. So don't be greedy and do a buy order here. That is a very common mistake between the traders. because they may have had a buy order there and then they will add another buy order, but you shouldn't be greedy. If you have a confirmation and a good signal, that is when you can do your second order. So I have traded and I have opened orders on 3 charts and I keep on checking them. If any of them gives me a signal, I'm going to exit. And that will be okay. So if it comes down a bit, I won't be afraid. Maybe it's an engulfing candlestick. So I'm not going to get stressed out and exit. I'm checking the charts that I haven't traded on as well. I told you that my CAD chart is the opposite of my pound and euro chart. So I'm going to check them to see if my order is correct or not. To see when I have a descending signal in those 2 charts, my CAD chart is giving me a descending signal or not. So I'm checking on them constantly. I have a pivot in my gold chart. And I have another pivot here, an open close pivot. So my first take profit should be here. I have a trend line. So when I check the charts, I see new points everywhere. So I should update my stop loss and put it a little bit lower. I'm not going to be greedy and close my order. If the pivot is broken, I can do another trade. So I will put a buy stop here. I hope the spread doesn't hit this. I will put it a little bit above this. In my pound chart, the elasticity is downward. So because it's too much, the elasticity is amazingly downward. So I won't be greedy and close the order. You see, I have done a safe trade here. I will put it above my candlestick so that I don't have an engulfing one. My order here has been opened, the pivot has been broken, and my next pivot is here. You should be very fast, and you have to locate your pivots when you're looking at the chart. My first pivot is here. This is my first pivot, and my second one is there. I have another pivot here. So I will close the order here. I wasn't paying attention to this pivot. That's okay. I closed the order and I have gained my profit. I have another swing low pivot there and another one here. The pound chart has gone further than that, so you have to put your take profit and stop loss on the market. This is my take profit. I have a pivot here, so I will gain the profit and exit. And I'm going to consider the next candlestick. I will wait for it to get opened completely and be a continuation candlestick. I won't be greedy. In my oil chart, I don't have a confirmation yet. The price is stuck below this one. And it has been stuck for a while. So I'm checking them constantly. A V shape is going to be formed, so I update my stop loss. Look at this candlestick, this hourly candlestick. Let me delete this first. So you have to memorize this. I was trying to move it higher, but it went over it. So when your candlestick is stuck like this, you know that it's going to go up. There's an open source. So when the price is going up, the chart starts to be compressed like this. That means that it wants to go up. That is why the chart is getting compressed. So always be mindful of this. If the price gets a little bit lower, it means that it wants to go up. In your euro dollar chart, I'm getting ascending signals. This is the reverse V shape. I want to see if the V shape is going to be formed or not. I will put a buy stop here to see if it will be formed or not. In my pound, I haven't determined my stop loss, so that if this engulfs, I will get my profit. I'm going to find the take profit. You see, right now, I shouldn't do anything. So I'm going to determine my take profit and stop loss. In my oil chart, let me check the gold chart first. You see that? It declined. Let me see if I can take a new order or not. Yes, I can. I can take a new order on this. Yes, I still have time. This is an engulfing candlestick. So I will put my stop loss exactly below it. My next take profit is on my next pivot. Let me find the next pivot, which is right here. Don't be afraid. If you lose money, don't get stressed out. I have a pivot right there. It went over it, so the chart here is a little bit compressed, as you can see. It's below my trend line, so I close it. If it goes further than that, I can start buying again. The fractal is deleted. If it declines, I'm going to start the trade again. Maybe it doesn't decline and it goes up suddenly. I'm just thinking about buying here. In the oil chart, we've had a decline again. I will update my stop loss and I will put it below my swing high so that it doesn't go up and get faded out. And I keep on checking the market watch to see how long I have left till the 4-hour or hourly candlesticks are completed. The euro dollar chart has been opened. I will check it to see what has happened. This candlestick is giving me an ascending signal, so I will determine my stop loss quickly so that it doesn't deceive me based on this pivot, because we've had candlesticks there and then it has declined suddenly. This is my take profit. I have traded the opposite of the market elasticity in my oil chart. The elasticity is downward. I shouldn't put my stop loss far away from my target. I should be very careful because I this is a risky trade. The price is stuck there for too long. I have to be very careful about it. And the trend line is this. Something was closed. Yeah, my euro dollar was closed with profit. So the euro has moved, therefore the pound has to move as well. I told you which one of these move faster. You see how well I get the signals from them? Oh, I wasn't paying attention. It was below my trend line. This is giving me an ascending signal in my I have to do something about the oil chart. It is going down. I have to close it before the profit is lost. In our tradings, if you get an ascending signal, but something happens and you get the opposite signal, for example, you were buying and you were gaining profits, but suddenly the signal changes. You shouldn't be greedy. Put your stop loss and don't touch it anymore. And close it with your loss because the signal has changed. I'm going to draw the trend line. This is the trend line. And let's move on to the gold chart. The elasticity is downward in my gold chart. And the trend line is being broken, so I'm going to close the deal with loss. You see, the elasticity suddenly changed. So this candlestick could be completed as a reversal candlestick. If it's completed like this, we have to close the order with loss. It is giving me a descending signal, and it's very suspicious. The euro is going down, so pound has to go down as well. You can do hedge trading as well, but I don't have a complete analysis right now. If my orders are too heavy, I can't do hedge trading as well. I wasn't paying attention to this trend line. I've opened the order first and then I paid attention to the trend line. I think a news is going to be published. You have to be very careful and you have to keep on checking your time frames constantly. Don't be greedy. Determine your take profits and stop loss on the market. You see, the signal is changing. All of the signals have changed. The trends have changed. In my oil chart, I have a descending signal. If we get a signal, it would. Yeah, the stress may be too high for this. You have to be very careful. You see, the candlestick, your hourly candlestick is getting completed, and it's very important how it's completed. So I'm checking it constantly. You see, I made a mistake here. The price was down there, and I wasn't paying attention to it. I put the stop loss there, and I'm not going to touch it. In my oil chart, I have hopes here. A little signal is there for me. I told you that in your longer time frames, we have a descending signal. We hope that we're going to have an engulfing candlestick there because the pivot is below that. This is the time of the day that your trend is going to change. I have to close the order on my pound chart, but I'm not going to rush into anything. I have lost $30 here, and I'm going to close the order. Let's see if we have any opportunities in our gold chart. You see, we have a very powerful pivot down there. But in our daily candlestick, we have a descending signal. It was completed inside the pivot, but the way it was completed is a little bit strange. This is a very risky order. So, yeah. I'm going to determine the stop loss. I have made a bit of a risk here. In my oil chart, I have an engulf and a continuation candlestick. So it's going to go down, but don't be afraid. You have gained your profit, and you're going to make up for your loss. Don't try to get revenge on the market. We have a pivot here, so I'm going to exit. You see, I made up for the loss that I had made. Be very careful and keep on checking your market watch. I told you that on 7 or 7:30 p.m. the market is going to change. It means that all of your signals are going to be the opposite of what they were because of the news that are published at this time. So I'm going to comply with the rules. I told you when it went down, I was going to buy. I'm not going to sell. That would be too risky. So I remember it too. I have left the line that I wanted there. So we have an ascending signal here. It's below my pivot. I'm not going to risk it. It may continue its movement up until there, but I have to get a confirmation first. I'm going to check my charts constantly. I have one pivot here and another one there. So you see that the market compressed a little bit. It means that your price is going to go up. An ascending signal is confirmed and the neck up there is opened. You see that area has been opened and broken. So if the market is compressed, that is another confirmation for you. I'm going to determine my stop loss and also my take profit. I'm going to draw a Fibonacci on my oil chart to determine how long it's going to continue its movement. You see it's on the 61 level. Around here. In my Euro chart, I can buy. We had a pivot here. So I'm going to open a buy order, and it's the equivalent to the market elasticity. Let's locate the pivot. Today we're going to just trade. We have 1 minute left. If the candlestick is completed as a doji candlestick, it will be a descending signal. So the candlestick is completed as a doji one. If it goes up a little bit, we have to close the order because it's giving us a descending signal. The upper shadow is longer than the lower shadow, so I'm going to close it. It is giving us a descending signal in my euro chart, but we can do a long-term trade there because the elasticity is upward. We have an ascending signal, but I'm going to wait because I'm going to buy here again. I'm going to locate the pivots. The price is stuck there. We must have a pivot. Yes, it's right here. But I'm not going to be greedy and open another buy order. It has given us a buy signal. I'm trying to locate the pivots. So the pivot is exactly here, below the swing low. The swing low that I have here. I have to be careful about this. It has given us a swing high, but it's not confirmed yet. I'm going to draw the trend line. I'm going to find my other trend line as well. The stop loss was correctly adjusted. Don't be deceived by this. You have to get the confirmation first. I'm going to use my technique. The accurate stop loss is exactly this, below my open close pivot. I'm going to update my analysis constantly to avoid any errors. I'm going to put the take profit here when it retraces. This is what I told you about the opposite. If it declines up until here, I'm going to open and buy order, because after that it's going to go up. So this one has to go up. This is giving me an ascending signal. I am completing this V shape in my mind to see if it can form a V shape or not. It is probably going to reach the trend line here. It is going to go further than my 50 level Fibonacci and reach the 61 level. It's probably going to touch the 61 level. The elasticity is upward, so I'm not going to trade the opposite of the elasticity. Don't trade the opposite of the market elasticity, because if you do that, it may give you a severe retracement, and after that you can't do anything. You have to close the order with a lot of loss. But if you are trading equivalent to the market elasticity, even if it has a little correction in between its fluctuations, that's okay, because you'll know and you're sure that it is going to reach your target at the end. But if you're trading the opposite of the market elasticity, if it retraces, you're going to lose a lot of money, because your trend is going to change completely. So that is a mistake. You can draw a new trend line here. This candlestick is a continuation candlestick. Wait for it to reach here, and after that you can take a buy order. Because if you trade right here and put your take profit here, it could form a shadow, or it could be a reversal candlestick and go up. So this candlestick is going to touch this area, so that is where you have to open the order. No, the overall trend in euro hasn't changed. The trend is ascending. This is just a correction. If you're talking about the shorter time frames, that is a correction. You see, the trend line is still reliable. And if I want to draw the partial trend line, it would be it. In the past, the price had reached this area and then it had gone up suddenly. So don't look at one or two candlesticks, look at the wave. And your midterm trends are going to change in your 4-hour time frames. If you have a reversal or a swing high candlestick in your 4-hour time frame, you can say that it has changed. But your long-term trend is still ascending. You don't have any signals that confirms the opposite of that. You say in our pound we have a doji candlestick and it has opened this area, but then it has gone up again. Wait for it to reach this area, and after that you can open a new order. But if you do a sell order, you can't do anything. You have to close it with loss. But if you take an order and the trend changes at 7 or 7:30 p.m. and it was equivalent to the market elasticity, that is okay. You don't have to worry, because at the end it's going to reach your target even if it retraces. I'm checking the time frames constantly and I'm looking at all of the candlesticks that I have. One of the common mistakes between the traders is that when they lose in one or two of their accounts, they think that that trend is going to stay like that and they ruin their strategy and they keep on losing money. But you shouldn't be afraid, because if you're afraid, at the end of the night, you say that you have lost half of your money. And you can't find a trader that has gained profit from every single trade that he has or he or she has made. You have to go with the flow of the market. So where your trend changes in your market, that is okay if you lose. But you have to go with the flow of the market and make up for it. Make up for the loss that you have made. My pivot is here. It is an open close pivot. Exactly in this area. And it has engulfed the previous candlestick, so I can exit. And I have 7 minutes left until the next candlestick is completed. So I'm going to exit because this is engulfing. I have to be careful and close the trade here. I don't want these 2 or 3 pips. I'm going to close the deal right now. In my Euro chart, I have an ascending signal. And the trend is upward. Even if it gives me a correction, I won't be afraid because I know that the elasticity is upward. So I keep on checking my time frames and my charts. The gold is in this area right now. When if it's in this area and when if it's at the end of its V shape, I'm not going to take any orders and I'm going to wait for it to see what's going to happen. This is the area where it may go up or it may go down in one movement. Because I can't predict it, I wait for it to give me a signal. So in this area, I don't take any orders. It's very important. This is your 61 level of Fibonacci. You shouldn't take any orders. Wait for a signal from your candlesticks or wait for the pivots to be opened or broken. Look at the pound chart. I told you not to be deceived by it. The price is going to stop here in my oil chart because we have a pivot there. Because I'm checking the market watch constantly. And I have 1 minute left until my 15-minute candlestick is completed. And then I can see what signal it gives me. It is giving me an ascending signal. In my 1 minute time frame, I don't have a confirmation to do a scalp trading. And my 15-minute candlestick is almost over. No, excuse me, we have 5 minutes left. And my 5-minute candlestick is giving me an ascending signal. So I can do a risky trade and put my stop loss here. At this time of the day, we're not going to have much fluctuations because the main fluctuations has had been over, like the oil chart. But in my euro chart, we haven't had the main fluctuations in our NZD and euro and these charts because we don't have a good signal. Some charts have delay. I'm going to draw the Fibonacci here. I have opened a risky trade with a small stop loss. A risky trade is when I know that the elasticity is upward, but because I have buy orders here, I'm not going to continue the buy orders for long-term trading because I know the corrections will ruin the account and it's going to cause me a lot of loss. But when I have this situation, I know it's going to last. We have a pivot here and the price is stuck there. It is probably going to decline and reach here. You can do a trade based on the decline here, but with decreased volume. I'm going to do scalp trading here. If it goes further than this point, I'm going to close the order. We have 1 minute left until the 30-minute candlestick is completed. When the candlestick is completed here, it's going to stop for a while, and after that, it's going to go up. We have an ascending signal. This signal is an ascending signal. And it is going to go up until here. One point is the here and another point is that. The 30-minute candlestick is giving me an ascending signal. Also, the 15 and 5-minute candlesticks are giving me an ascending signal. The hourly candlestick hasn't been completed yet. It is giving me an ascending signal, but it's not a very good spot. I'm going to start buying here. If it declines and reaches here, I can do a buy trade. A very good buy signal. You have to memorize these candlesticks. Look at this candlestick and memorize it. Memorize what it looks like. Exactly the highlighted point. Memorize this. This is exactly what an ascending signal looks like. But you want to know how long it's going to go up. It's going to reach this swing low pivot here, and after that you have this one, which is equivalent to it. I'm going to draw the trend line from here. I'm going to update the trend line. This is my partial trend line. So as you can see, I'm using all of the strategies. I'm not only using the candlesticks, the strategy, or the pivots. I'm using all of the strategies. You can't use and rely on only one of your strategies. In the gold chart, we have an ascending signal, and it's going to go up until here. But because it's inside the pivot, it's probably going to be an engulfing candlestick. Because of that, I'm not going to risk and trade here. I want to trade on good spots and good opportunities. I'm going to wait until the price declines in my oil chart, and after that I'm going to trade. This is the trend line here. I updating it constantly. That is the pound chart, and I told you not to be deceived by it. I told you that if the candlestick is completed like this, it's a descending candlestick, and even if it's from the bottom, it's a descending candlestick. But you have to keep in mind what your elasticity is. You shouldn't trade the opposite of the market elasticity. You should be very careful to have this situation at the bottom of the market so that it's going to send the price upward. So don't be greedy. As you can see, I wasn't greedy about this. I opened a buy order and I put my stop loss there, and it was closed. But after that, I didn't do a sell trade here. The uptrend is confirmed here, so it's not going to be risky for me to trade here. I'm going to... This is a confirmation. So I keep on updating my orders. Because right now this is giving me an ascending signal. So if I put my stop loss here, usually when this candlestick is completed, it's going to engulf its previous ones. So I shouldn't wait for it to go up. If the stop loss was here, it would have been opened. So it's going to reach this point, and after that it's going to go up. So you should keep on updating your orders. You should keep on updating your stop losses or your take profits. You see, this is my final take profit here, but I updated it and I should put it here. So you should update your analysis constantly. The oil chart has a very good upward elasticity. I know it's going to go up. If I buy here, I'm going to lose, even if it goes up from now. It is giving me a very good buy signal in the 30-minute time frame, but I will wait till it goes a little bit lower. If I risk or if I'm greedy, that would not be good. I want to do the trading safely. And even if it goes up, that's okay. I don't mind. You can do something else. You can use half of your volume. Instead of doing one lot size, you can trade with 0.5 lot size. You can do that as well. You can cut your lot size in half. So if you are going to trade with your one lot size, you can do half of your lot size here, and if it goes down, you can add the other half to your lot size because you know it's going to go up, so that you gain something from your chart. In my euro dollar chart, it was going to reach the stop loss and then go up. So that is why I tell you to keep on updating your analysis. You're trading, you're analyzing, and it was giving you the ascending signal, but suddenly it changes and it gives you a descending signal. So you have to keep on updating your analysis to have the least amount of loss. When you're online on the market, you shouldn't just look at the fluctuations, look at the price going up or down. Some people just look at the candlesticks go up or down. They don't check on their analysis constantly. But you should do that. It is giving me a weak signal. It's not a very good signal. This is actually a very bad signal. I can close the order here, and when it goes further than this point, you can add a new order. But this is a very bad signal, so I will reduce the order here, make it lighter. I keep on updating my charts. You see, in a shorter time frames, I saw something very bad. I saw a doji candlestick. The price wanted to go further than this point, but it stopped here. So I'm going to reduce the volume of my orders to reduce the risk. Dow Jones is going to reach here, but I don't want to open trades on 4 or 5 charts. That way my mind will be too crowded, too involved with all of these charts. The price is stuck here. I'm going to exit the market, and when it goes further than this point, I'm going to start the trading so that I'm trading with lowest risk. If it comes down, I'm going to trade there, but I'm going to put a buy stop here so that I'm trading safely. It is going to reach my buy stop, so I will update it and drag it higher. So in my 30-minute time frames, I have an ascending candlestick, and this candlestick usually engulfs its previous ones and then goes up. So you can put a buy stop here with 0.5 lot size, but you have to find your elasticity. You have to trade equivalent to the market elasticity. So I will use 0.5 lot size here. So I'm going to open the order here. And I will put my take profit on the 30-minute time frame right here. I'm not going to be greedy and use my whole lot size here. And in your chart, we see this Doji candlestick. It was giving us a very good signal, but it's probably going to decline up until here, and after that it's going to go up. This Doji candlestick kind of ruined it. I'm going to reduce the volume. I'm going to stop it. The next candlestick is completed. It's probably going to be an engulfing and it's go up. So I'm going to put a buy stop here. So it is probably going to reach the point I told you, and after that it's going to go up. So if it goes up, the buy stop will be open. If it comes down, I'm going to start a trade from there. But I'm going to stop trading when the price is at this point. I can see the fractal, so I will gain the profit and exit. You see the fractal here? In my 15-minute time frame, we see a reversal candlestick. I will put a sell stop below this. You see, this is a V shape, right? So when the price reaches here, that will be my reverse V shape. This is not the end of the first leg of my reverse V shape. When it reaches here, that would be the first leg of my reverse V shape. So you shouldn't be greedy and should wait for it to see what happens. Look at the Euro chart. This here has ruined the trend. I understood that sooner than it happened, and I didn't let it make me lose money. Your pivots are here because before it had reached this point here, so we're going to have to update our analysis. You have to pay attention to this. When you have swing lows like this, when the price goes further than them, it's going to go a little bit below them, and after that it's going to go up. That is why I tell you to update your analysis and keep on constantly checking your charts. The fractal has been deleted from here. You should be very careful. You should keep on watching your chart. It means that it's going to decline even more. So this could be a descending signal for you. If you are buying with lot size of 2, if you want to do the opposite of the elasticity trading, you have to reduce your lot size. You have to try to gain profits here. The price hasn't gone further than this one yet. You see the pound chart here. Don't let it deceive you. We have a sell stop below that. A lot of people get deceived by this and lose their money in here. Let's move on to the USD CHF, and I told you that we have a sideways trend here. And I told you how to understand you have a sideways trend or not. If you have a fluctuations, for example, in your euro chart, it has gone up and then it has declined, and after that, it's going to have more fluctuations. But if it's going on a sideways trend, it is going to ruin your account. You shouldn't trade based on them. I didn't waste my time on the charts that were not good. At this time of the day, the market will be weaker, but it's not like that you can't trade at all. I told you that the Dow Jones is going to reach this point, and it did, and it shocked the price. Based on the Fibonacci candlestick, pivots and trend line, you can do your tradings. I keep on updating them and drawing them for myself on the chart. I keep on updating my analysis when I'm trading. Sometimes I don't trade at all. I don't want to ruin my account. You see, for example, in the oil chart, I lost money, but I didn't want to take revenge. You can gain 5 to 10% of profits every day. But it's not like that you gain all of that profits in 1 hour. You see, I lost around 30% of my profits here. But that's okay. I still have time to make up for it. I'm going to stock the market and wait for good opportunities. If you lose in one of your orders, that's okay. You can make up for it by taking a new order. Do you have any questions? Is anybody here? Yes, we're here. Uh, when the market is still weak, you can ask your questions. Please go on. Excuse me, I said that if we have $1,000, how much money do you get involved in your scalp trading? You see, scalp trading is different. For example, I have $5,000 in my account, but I have done my tradings with two lot sizes or 4 lot sizes. You see, in your scalp tradings, your volume is a lot, but your pips are smaller. You have to adjust it yourself. It's not something that is always the same. You see, for example, you have $1,000 in your account. You can use 0.3 or 4 lot size. Can you hear me? Yes, I can. You can't determine a certain volume. In your scalp tradings, that is not performed because you're doing the short-term tradings. But if you want to do midterm tradings, for example, in this euro dollar trade here could become a midterm tradings from the scalp trading because we've had a little correction in between, and because the elasticity is upward, I'm going to continue this order and I'm going to change it to a midterm trade. Now you can see this candlesticks ruined my analysis, so I exited. I knew that because my lot size was heavy, I exited and now I wait. I wait for it to reach here and I can't do a sell trade with 0.5 lot size. You have to keep on updating yourself. You see, for example, in here, I can do a small sell trade here. I have located the pivots before. If the price reaches this line here is faded out and I have to delete it. I shouldn't let it ruin my account. If one of your analysis or one of your strategies is faded out, you have to delete it. Because if you don't delete it, you keep on thinking it's going to be performed and it's reliable. But if you delete it, that means that you're deleting it from your mind also. I told you that the gold is going to go up until here. It did, and after that it declined. So we could have sold here and gained the profits up until here. The rules are always the same. There are no new rules. But you have to keep on practicing. Sometimes you have to stop trading. You shouldn't rush into it. You see, I'm in no rush. I told you that if I don't gain $500 of profits, I'm going to give each of you $100. But I have all night. I'm in no rush. And you should be the same. If you're online on the market, don't tell yourself that you're going to gain profits, gain a certain amount of profits in 1 hour. Because that is not what usually happens. Sometimes you get very good fluctuations in a specific period of time, but after that you have a sideways trend and a bad market. That is where you shouldn't trade, because if you trade and if you want to revenge the market, you're going to lose. All of us do that. Even I myself have done that. Sometimes I have gained a lot of profits, but then I have lost all of them. So I have increased my volume and started tradings. But that is a mistake. Sometimes you get a very good signal from a candlestick and you can gain a lot of profits from that. The total will be a lot. But I don't claim that I can gain $500 of profits in just 1 hour. I keep on updating my analysis. I'm just telling you everything that is on my mind. You shouldn't rush into anything. You should analyze your market to see if it's a good market or not. Some people claim that they gain or they can give you 1,000 or 2,000 or 3,000 pips of profit in a week, but don't be deceived by them. You can't tell yourself that I'm going to gain a certain amount of profits in just 1 hour. Sometimes you only have 30 minutes of time. Maybe you're busy, you want to do something, and in that 30 minutes, you want to do all of your tradings and you want to gain all of the profits that you can. But that is impossible. You have to be patient. You see, in here, I understood that this was going to happen, so I exited beforehand. I didn't. I was waiting for the confirmations. I didn't trade the opposite of the market. But get used to putting your buy stops on the market. In here, if I hadn't put the buy stop here, I would have lost a lot of money. Because when the price reaches the buy stop and you gain your profits, you'll know that you have done a very good thing. I have done the same thing on the oil chart. I have put my sell stop there, so that it has given me a descending signal. It has to be confirmed. So I have put my sell stop here. But if I had exited here, I would have lost. I would have put my stop loss here and the price would have reached it and it would decline. But you have to update it here too. Because when it's declining from the top, you will delete this and you should wait for a new opportunity. The price may reach here, and when it reaches here, I can sell. Or maybe if a candlestick is completed in here, that is another opportunity for me to start a trade. But anyways, I'm not going to trade at this point. Look at the pound chart here. The pound is giving me a buy signal, but it's between the resistances and the supports, so I don't want to trade here. In my 4-hour time frame, it is giving me a buy signal, so we know that the price is going to reach this point, but the exact entry points are determined in your shorter time frame. So I will put a buy stop here. I will put a buy stop here on the bottom. I don't do anything at this point. Sometimes you should stop your orders. That is what you should do. That is how you do it. You're good analyzers, but sometimes you lose the strategies. Sometimes you lose yourself on the market. You don't comply with the rules. For example, in here, it is giving us a very good signal and it's moving on your trend line. But so I shouldn't buy here. I will wait for a confirmation. I will wait for the price to go further than my line. Because this could be an engulfing candlestick and maybe this gives me an ascending candlestick and it goes up. You see, in my mind, this candlestick is going to be completed here and it's the beginning of the V shape, so it's going to form the V shape. if you want to take a risk here, you have to put your stop loss there. You have to be mindful of your candlesticks. You see, with the accurate stop loss and reduced volume, I can do a trade here. Are there any questions? It's exactly the same in the oil chart. This candlestick is giving me an ascending signal. In my mind, it has to decline a bit. That is what is going on my mind. So it's going to decline and form a candlestick base here. And the shadow that I have here is going to go like this. So this will be the swing high, and after that it's going to go up again. But because I don't have any confirmations and the price is stuck between these two, I'm just doing this on my mind. I will wait for the price to get far away from this shadow, and after that it is a confirmation for me that it's going to decline. So that is why I don't trade at this point. I keep on analyzing the market and the trend, and I keep on creating the patterns in my mind. But sometimes the market gets weak. I told you that when the classes started, we have a lot of fluctuations and a very good market. But because I'm still working with the Iran's time zone on your 7 or 7:30 p.m., the market changes. But it gives you a correction. It doesn't mean that it's going to change completely. For example, in here, in the oil chart, which time frame was it? In my oil chart, I have a weekly descending signal. So you see, the, I should wait here. I should wait 2 or 3 days. When the order is opened and my analysis was correct, I'm going to gain a lot of profits. But for example, in this time frame, I should do scalp trading. So I have stopped the trades here. Yes, I will upload the video after the class. Alright, so everyone, around midnight, around 1:30 a.m., I'm going to send you the recorded version of the video, and I will tell you if I have gained that $500 of profits. If I don't, I will give you $100 each. So I'm going to stop the video here. Any questions? No, thank you. You're welcome. You see, I'm going to send you the video. Please rewatch it carefully. Pay a lot of attention to the things that I have said in the video to see how I have traded, how I have lost or gained money, and how it happened. You see, exactly where when I was losing money, I remember that it's 7:30 p.m. So I'm analyzing everything in my mind. You see, the candlestick is getting completed here. The market has no errors. The traders and analyzers have errors. I think it was in the pound chart, in the 5 minute time frame. I wasn't paying attention to this trend line here, so this small mistake that I made lost me a lot of money. It was my error, my mistake. But that was okay. I didn't get stressed out. I didn't say to myself that I have made a mistake in front of 25 people. That was okay. I kept my cool and made up for it. So don't expect to gain a lot of profits in 1 or 2 hours. I'm telling you that you can gain 5 to 10% of profits every day. And you can see that that was what was happening here. But a small mistake made me lose money. But that's okay. You shouldn't get stressed out. In this market, you can gain profits easily. You should. In the market, it's not that you can gain profits easily. You have to make time for it. Because if you lose a little bit of money, it makes you stressed out. It makes you greedy. You may need money very soon, but you shouldn't get greedy because if you lose, you're going to lose twice. But we're going to talk about the psychological points in our future sessions. Any questions or problems? You see, the investor app is having problems on the CHF chart. I have told the technical staff to fix this. Let me see if it's fixed or not. Our investors have errors. Mr. Armagani, are you here? Mr. Armagani. I don't think they're here. Because I don't think if this password is right or not. My investor hasn't been fixed yet. I have sent my password to Mr. Armagani. If it's fixed, I will give you the main one so you can look at it. Okay, so any questions? No, thank you. You're welcome. Euro dollar has a very good market. Be mindful of it. Everyone have a good day. Please stop trading so we can gain that $100. Okay, I will. Thank you, everyone. Have a good night. Goodbye.